This is the second video on SEC reporting documents for the Accounting 203 class. This video talks about the 10Q statement, the 8K, and the proxy statement F14A. Once again, on the outline, there is a summary of some of the things that we'll look at, and once again, we're going to use the Whole Foods quarterly report since that was one of the companies that we talked about in class. So I'm back on the SEC website, and I'm going to look for the 10Q report using its search engine, and you'll notice that there's 3 10Qs filed for 2015. One on February 27th, one on May 15th, and one on August 7th. And if you go back to 2014 here, right, once again you can see one filed in February, one filed in May, one filed in August. So those represent the first, second, and third quarters of the year. Public companies don't have to file a 10Q in the fourth quarter of the year because at that time they're filing the 10K document, its annual report. The annual report is more comprehensive than the quarterly report, and so it's going to cover all that information. But to keep investors up to date as to what is going on, there is also the requirement for quarterly reporting. So when I click on the link and go to the 10Q document, it comes up on the screen. And the first thing that we'd like to talk about would be the information that it gives you for financial statements. So just like the 10K, there is a table of contents. Here I can see listed different types of financial statements: balance sheet, statement of operations, statement of comprehensive income, and so forth. One thing you'll notice up here is that these quarterly reports are unaudited, and so what we receive is information that has been put together by management but has not been audited by a external auditor. The external auditor does something that's a review, which is a much simpler check of the numbers. But when we look at it, right, we can see current assets, long-term assets, liabilities. Scroll down a little bit, there's the equity section of the financial statements. So here is the July 5th one. That would be for the quarter, and what they're doing is they're comparing it to September 8th, 2014. That would be the company's position as of the prior year end. The next section we'd like to look at is management discussion and analysis. And so when we scroll down, once again, this is similar to the management and discussion and analysis that's included in the annual report 10K. I guess it's perhaps slightly less detailed since some matters only need to be discussed on an annual basis. But what it's basically going to do is give some information about what has happened in the current quarter, and also possibly provide some information about where they think the company is going in the remaining part of the year. So for example, here they're talking about for example, the number of stores that were open, right, in the current quarter, in that same quarter in the previous year, in the year-to-date current year, year-to-date prior year. So management discussion and analysis, letting you know some things that are that are important. The third area is legal proceedings. And so when I move the table of contents to legal proceedings, we see here kind of a brief discussion of that. In this case, it says that it is accounted for in the other current liabilities section of the balance sheet. It talks about, in a general way, them being involved in personnel and employment issues, personal injury, product liability, but since outcomes are often difficult to predict for lawsuits, they really don't get into a lot of specifics. And then the third area I'd like to mention is risk factors. That's this next section here in the 10Q. They say there has been no change in their risk factors since the annual report of September 28th, 2014, and so they just incorporate that by reference. So once again, remember when we looked at the previous annual report, there were a variety of items that were discussed because those could affect the operation of the company. So basically what you're getting with the 10Q is a smaller version of the annual report providing both financial information and management's analysis of that. Okay, I'm going to go back to the SEC's website. And I'm going to search for the 8K, and we're going to see a lot of those. In the outline, I mentioned that the 8K gets filed according to SEC requirements upon the occurrence of one or more events. And these events are listed below. It's a brief summary here, but there's a lot of situations where rather than waiting for a quarterly or annual report, the SEC has said that investors need to know about this type of information immediately. And so what happens is that information is recorded in an 8K, delivered to the SEC, made available to the public through EDGAR. So if we just look at one of these, in the first one here, it talks about the fact that Whole Foods has entered into a situation where they borrowed $1 billion. They issued notes paying 5.2%, and the rest of the 8K document gives some information about those notes. So certainly a company borrowing $1 billion is important. Therefore, rather than waiting for that to get disclosed on a quarterly or annual report, the SEC says that has to be delivered immediately. And as I scroll back, you can see here that there's a number of 8K documents, and this is very typical of a lot of organizations. Then the last thing to be looked at is the proxy statement. The proxy statement is something that is sent each year to investors. The investors own stock, which means they are owners of the company. And as owners of the company, they are entitled to certain information, plus they are also entitled to vote on things that are important for the company being a owner. So if I were to search for the DEF 14A, we can see here that on January 21, 2016, a proxy statement was recently filed. And so when I go to look at it, I'll depart from my outline here for a minute. This first page gives some information about when the stockholders meeting will be held. So on March 9th, 2016 at 8 a.m. at the Fairmont San Francisco, must be a hotel, 950 Mason Street, stockholders can attend to vote on things. Or if they're unable to attend, there's usually a ballot included that's sent to an independent party, and the independent party will tally up the votes, and at the meeting the results will be announced. So that's the date and time information. We scroll down a little bit. There's a table of contents. And so the first thing I mentioned is the election of directors. If I click to that page, we have information about who the directors are. We scroll down a little bit, we can see information about their background, and so the stockholders have the opportunity to vote yes or no as to whether or not they would want these people to continue as directors. The second thing that's in the proxy statement is executive compensation, and there's a variety of different types of discussion about executive compensation. I'm going to go to the summary compensation table for 2015. And so one thing you'll notice is a person who's listed as co-CEO has voluntarily given up most of his salary. That person has just agreed to be paid $1 per year. I believe this person has made money elsewhere and has just decided, perhaps through investments, to remain active in the company. And I think given that person's background, the company thinks that's a good idea. The person who's probably the engaged CEO, right, is getting a salary of $486,000, $600,000 in stock awards, $570,000 in stock options. A stock option is a form of compensation where the stock can be purchased at a certain price in the future. There's some other incentive plan, some other form of compensation. So in total, all different kinds of compensation, the CEO's making a little bit over $2 million. And what companies have to do is disclose the top salaries. You usually see it for like the top 5 or 6 people in the organization. And then the other thing that's included in the proxy statement deals with the ratification of the independent auditor. So if I return to the table of contents and go to this section on ratification of independent auditor, independent public accountant, you see here that they're asking the stockholders to approve Ernst & Young as their independent auditor. We see over here that Ernst & Young in the prior year was paid a little bit over $2 million for audit fees. That's a lot of money, but Whole Foods is a very big company, and so in order to gather information and test transactions and look at controls, it's a pretty complicated process, and so that's why we see such a high price. Since Whole Foods is a public company, I could explain more about this in class, but the government laws have restrictions on the kinds of things that auditors can do. And so if an accounting firm is auditing financial statements, there is a limited amount of work that they can do in other areas so that investors know how much other work the independent auditor is doing. The idea being an auditor would not be very independent if they're doing a lot of other things besides the audit. Those fees have to be disclosed. So there's nothing there. So Whole Foods has a pretty clean audit relationship. It's probably using a different accounting firm, say, for example, for help with tax work. So that's the idea of what is covered in the proxy statement, right? It's information sent to investors so that they can vote. The 8K deals with disclosing important activities where it's necessary to not wait for quarterly and annual reports. The quarterly report is kind of a smaller snapshot of the annual report, and the annual report is a very lengthy document discussing many things about the company. So that's the conclusion of the second video. Please review the outline. Please review those links at the SEC. Those are the things that will be covered in the quizzes when we return to class. I look forward to seeing you next week.